Hi, I'm Pete, MD, founder and one of the experts here at OMA. I'm here today to share with our lovely bankruptcy customers who are looking to get a mortgage, basically to walk you through our article and the key information you need to know when getting a mortgage if you've had a bankruptcy. So first off, before I get into it, we've been doing this for years. We've helped thousands. I mean, it says on the site there's over 8,000 customers we've helped now who've had bankruptcies get mortgages and get the right advice. We have got a most incredible team with the guys there that literally dedicate themselves to helping people like you with bad credit. They don't really do anything else. So as a result, they're in it day in, day out. They know exactly what they're doing and they are wonderful and lovely and really helpful. So for them, this is what they do every day. It's a walk in the park. For some other advisors, maybe you don't come across this type of scenario, it is more tricky. So that's why it's so important to get to the right place. Now, first off, I think just running through the article from top to finish, basically. So you've got a video version of this and you haven't got to read it all. Right now, over 70 lenders that consider bankruptcies if you're a 6 years discharge. Is it 6 years discharge? If it was in the last 3 years, and obviously the main thing that happens when lenders are looking at people with bankruptcies and whether you're going to be eligible, the main thing you want to know is how long ago was the discharge. Now, more lenders will do it if it was ages ago, fewer lenders will do it if it was yesterday, but there are still some that will do it if you've only just been discharged. So that's really important to know. There are lots of lenders out there though, basically. Our services, so you can get straight to it and go and speak to one of the guys. You can go through our Meet the Experts link or jump through to get advice that way. We can get you pre-approved pretty quickly, so go to pre-approval. If you've got an advisor already, fine, we can give you a second opinion on what's happening there. No obligation, but just chat to the team and see, right, if you've been offered a deal, is it as good as you could get? If you've been declined, maybe there is still an option for you. So that's really worthwhile doing. And if you just want to check before you do anything, are you going to be eligible? Do you qualify or not? Then our verify process is there for you. In summary, as I mentioned, there's hundreds of lenders in the market, well over 100 lenders in the market. About 70 are doing it if you were discharged over 6 years ago, 43 if between 3 and 6 years, 38 if it was in the last 3 years. If you've only just been discharged, there's still a handful of lenders that will lend to you. It obviously depends on how much deposit you've got, and then a lot more information around the type of scenario that the bankruptcy was caused by. So is it a life event like an illness or a redundancy or something that led to financial issues? Some lenders don't like it if it was tax related and you owed HMRC a lot of money. So that all impacts which lenders will lend to you. But the main thing is how long ago was it discharged? You can flick through the article and understand a bit more about the process. The main things you want to know, as I said, the length of time and the reason for it. Also, have you had any credit issues since the bankruptcy? So often what happens is actually borrowers who have had a bankruptcy, loads of debts have been swallowed up in that and should be now registered on your credit report as satisfied. That doesn't always happen. The credit reference agencies aren't always up to date with it. So what sometimes can happen is you're eligible with a lender, your bankruptcy was 4 or 5 years ago, but you still show on your credit report as outstanding debts and defaults that haven't been sorted that should have been when the bankruptcy was discharged. So that just needs a quick update. If you apply before you update your credit report, you can get declined because the lenders look like you've had a bankruptcy and then more issues, which is obviously going to look like a bigger problem than it needs to. So you just update your credit report and then you'll find declines that you're wondering why you've been declined when you meet the policy. Actually, it's because of that issue. But if you have actually had credit issues since, then you've had the bankruptcy and more problems. Lenders are going to be asking more questions as to why there was a big event and then now more problems. So does that mean you're higher risk? Doesn't mean it's a no. It's just that some lenders may then want to ask more questions or might decline you as a result. But the only really way to find that out is to speak to one of the guys and they'll talk you through it. We've got process information here. I mean, there's 2 ways to get a mortgage in general. Go direct to a lender or use a broker. If you're going to go direct, most of the market that is out there, you as a borrower that wants to go direct to them, about 60% of them you can do that with, but there's about the 30, it's about a third of lenders won't lend to you directly, and that's because they're pure mortgage lenders, they're not banks, and the FCA rules are that they have to go through intermediaries. So as a result, you can only access about a third of the market through a broker. Now, if you've got a complex scenario like a bankruptcy, the percentage of lenders that you're eligible with is much more weighted towards the broker market, because those lenders tend to be more flexible. So your high street banks tend to be tighter, better rates, but tighter on policy. The more flexible lenders may be slightly higher rate, but you can get more options, especially if you've got bankruptcies and stuff. So as a result, a lot of the market you're going to need a broker for. So just keep that in mind. The process and trying to find a lender for yourself is a blooming nightmare anyway, because how do you do it? You've got to understand your situation. So you get your credit report, you look at all the details in there, you know when your discharge date is, but then you've got to find all the lenders, go to them directly and see what their policy is about bankruptcy and discharge and everything else. It can take forever. That is why you need a broker. But there's a process here that tells you how to do it if you wanted to. A bit more information about the deposit that you're going to need depending on when the discharge was. Again, speak to a broker because these things do change all the time. We have a guarantee. You might have seen this on the site. So we're really confident in our service and what we do. So much so that we'll pay if there's another broker out there that can get a deal and we don't get you approved, we'll give you some cash. We also have a wider service guarantee than that, so it's not just about approval, but actually best deals and the turnaround time as well in our kind of service guarantee, which you can find out more about when you go on the site. We do this all the time. What we talk about in terms of trying to put an analogy around it to help understanding is a bit like GPs. So there's specialists and there's GPs when you go to your doctor. Your doctor can help with most stuff. But if you need an operation, you don't want your GP to be like, right, I'm going to crack your chest open and do some surgery. You want to go to a surgeon who knows what they're doing, and that's all they do, and they're brilliant at it. They're traveling the world, giving talks on it. They can do it blindfolded. We think about mortgages like that because there's a big range of experience of advisor in the market, and if you end up with somebody who's never handled a bankruptcy before, they don't know what questions to ask. They don't know what the lenders are looking for. They don't know who the lenders are that could do it. It can cause a right mess. And we often, like daily, rescue customers who have been let down by a broker who's had a go and not been able to do it properly. Not just out the kindness of their hearts, they want to help, but they haven't got the experience. And that's why it's so important that you work with somebody who does know what they're on about. So our model is a channel expert approach. Whereas if you've got bad credit, you go to a specialist who does that every day. Same if you're self-employed, you go to a self-employed specialist. If you want to buy to let, you go to buy to let specialist. We have different departments of channel experts in those teams. And that leads to way better outcomes. So you can read more about that on our website. Luke's got a case study here of a customer that helped not too long ago that you can have a read through. Yeah, here's some of the team: Luke, Sheridan, Richard, Graham. So the bed credit team, you can go and meet those guys. And we are recruiting, we're adding to the team all the time, but we only bring the right people into it that we know have got the experience and the ability to help. There's a bit more about lenders here and the rates that you can expect. And we actually have our comparison tool. So this is something that is not available anywhere else. What we found is with comparison tools in general, most mortgage brokers have an off-the-shelf tool that they've got from one of the sourcing, the rates tables companies that they use to help do their job. They have plugins that you can put on your website that are pretty naff, to be honest. And it doesn't help you filter, right, if I've got a bankruptcy, which ones can I look at? Same as the comparison tools and the big brand names that I won't name, but you can't filter the deals for you. So comparison tools are only as useful as a bit of a rates table to give you an idea. And if you were clean credit, you could go anywhere. Fine, maybe that's helpful. But even then, there's thousands of different criteria. It's not just about your credit history, whether you'll be approved. It's about your income. It's about affordability. It's about your age and your deposit type and the property type, etc., etc. What we've built ourselves is a comparison tool where you can actually compare bankruptcy-friendly lenders and mortgage rates. So you can go and have a play with that if you like. Again, a lot of them are going to be broker only, so you'll need a broker to help you with it, but also it gives you an idea. It won't tell you which one will actually lend to you because there's so many more things than the bankruptcy that get in the way of you getting approved. So the only way to know for certain what you can afford to borrow, what the maximum you can borrow is, what it's all going to cost and what you're eligible for, the only way to know that is to speak to one of the guys in the team. So there's a bit more information here about basic understanding of bankruptcies. I'm sure if you've had one, you'll know what it is and what the process is. But if you want to refresh your memory on that, you can do. and what you might do to rebuild your credit score. So yeah, there's some case studies here that we've got on the site. But as I say, if you need us, we're here. Ask us anything. There's no obligation to have a chat. We'll talk through what the options are, what you can afford, what it costs, what you're eligible for. And then if you want to go ahead, you can. If you want just a second opinion, then we can give you that. If you want to take the information away and come back later, no problems. We're just really happy to help. All right, thanks. Cheers.